Wall Street was a battleground this week. Optimism clashed with anxiety, and the major indexes ended slightly lower, snapping a 3-week winning streak. Despite a Friday rebound, the S&P 500, Nasdaq and Dow all posted modest losses, highlighting the market's search for direction amid mixed economic signals. The core PCE inflation report landed right on target at 2.9% year-over-year, calming nerves and keeping hopes alive for a possible Fed rate cut in October. Investors, ever watchful of the Fed, took comfort in the lack of surprises, fueling Friday's rally. Lower rates could boost corporate profits, so the market's mood shifted quickly on any hint of policy change. For now, the market remains on edge, balancing inflation concerns with the hope for more supportive monetary policy. The tug-of-war continues, with every data point tipping the scales. President Trump's new tariffs shook up the market, especially with a 100% tax on imported branded medicines. Major U.S. drug makers like Merck and Johnson & Johnson dodged the blow thanks to exemptions for companies building U.S. plants, and their stocks edged higher. Furniture retailers weren't so lucky. Wayfair and RH dropped as new tariffs hit their bottom lines. The tech sector was split. Amazon and Meta fell, dragging the indexes, while Apple surged over 4% on strong iPhone demand. Nvidia and Tesla also posted gains, showing that even among tech giants, fortunes can diverge sharply. The week's action proved that policy changes and product cycles can create winners and losers, even within the same sector. Investors had to stay nimble, as headlines sent stocks swinging in both directions. The market's volatility was a reminder, in uncertain times, company specifics matter more than ever. Every move was magnified by the market's search for clarity. Beyond tech, big corporate news drove major stock moves. Electronic Arts soared 15% on rumors of a $50 billion buyout, while Boeing climbed 4% after regulators eased restrictions and new orders rolled in. Intel gained on whispers of a partnership with Apple, fueling hopes for a turnaround. But not all news was good. Costco slipped nearly 3% despite strong earnings, as cautious consumer spending raised red flags. Investors are watching for signs of shifting consumer behavior, especially as economic uncertainty lingers. Even strong companies can stumble if future growth looks shaky. The market's message past performance isn't enough. Outlook is everything. Silver stole the spotlight, rallying nearly 4% on Friday and closing in on its all-time high, up over 60% this year, outpacing even gold. Investors flocked to silver as both a hedge against inflation and a bet on industrial demand, fueling its meteoric rise. Meanwhile, consumer sentiment soured. The University of Michigan's index fell sharply, signaling growing anxiety about prices and job security. Households without significant stock holdings felt the pinch most, highlighting a divide in who benefits from market gains. Rising costs and economic worries are making consumers cautious, threatening the engine of U.S. growth. If spending slows, the broader economy could feel the impact. The contrast is stark. While investors chase metals, Main Street is growing wary. The disconnect between Wall Street and consumers is widening. Political gridlock in Washington is raising the risk of a government shutdown, adding another layer of uncertainty for investors. A shutdown could disrupt economic data, delay payments, and dent consumer confidence, none of which help the market's fragile mood. With inflation, rate policy, and tariffs already in play, the political standoff is a major headwind. Yet foreign investors remain surprisingly bullish on U.S. stocks, with allocations well above historical averages. This steady flow of international capital is a crucial support, even as domestic worries mount. Global investors still see the U.S. as a safe haven, betting on its long-term resilience. Their confidence helps stabilize the market, even as headlines grow more alarming. For now, foreign faith is a key pillar holding up Wall Street's shaky optimism.